Good day, everyone. I hope you can all hear me. Right. My name is Ajayi, and I work with United Capital PLC Group, where I lead the digital and retail sales. I'll just first like to thank everyone at the TF for having me today. It's a great pleasure to be with each and every one of you. I hope today's session is as exciting for you as it is for me. I will be talking about how you can start making smart investments as an entrepreneur. I think this is very critical for every entrepreneur to be able to know how to make investments, understand the financial markets, and know how to navigate their way through this space. So I look forward to having your questions and answering them. Feel free to engage me on any question that you might have as regards the financial market or the capital market as a whole. So I look forward to speaking and meeting with each of every one of you during this session. So we'll start the session in about another 3 minutes. We just want to give everyone enough time to join the session. So good day, everyone. We're about to start. So I'll first start with talking about the brand, which is United Capital PLC Group. For those of you that might not be too familiar with United Capital, I'll first run you through what it is that we do, who we are, and how we can be of value to you. So United Capital is a leading investment bank in Africa. We've been in the market for over 50 years. Currently have in excess of $500 million in assets under management. It will please you to know that we're the only investment bank that is listed on the Nigerian Stock Exchange. This speaks volumes to the credibility of the brand, how strong we are, and the kind of value we've been able to deliver for our shareholders and of course our clients as well, right? We have various arms that provide various strategic value to clients. One of them being our investment banking. The investment banking arm pretty much takes care of things that have to do with mergers and acquisition, corporate finance, valuations, and the sorts. And we also have securities trading, where we help people broker transactions on the stock exchange and on the fixed income market as well. And we have the asset management business, where we provide value to retail, high net worth individuals and corporates as regards their personal investments, and we have the trustee services as well. Each of these divisions can add value to your various businesses in different ways. If you're an organization looking to scale up, our investment banking arm will be of good use to you as regards valuing your business and seeing where the opportunities are for you, whether to raise debt or equity via the various markets are open to you. If you're looking to also get listed and trade, we have the securities trading, and of course, if you're looking to make smart investments, then you have the asset management arm to help you with that as well. And we also have the trustee services to help you set up various trust requirements for your organization. So before we begin, I usually start these sessions with a bit of an economic insight. The reason why I typically do this is to ensure that we all understand what's happening in the market. I believe before you can take advantage of any opportunity, first of all, you need to have like a background knowledge of what's obtainable in the market. So we'll go through the local market and see what's been happening so far. So we'll be looking at the various macros. Firstly, we'll be looking at the GDP. Currently, the GDP is currently at 1.9%. We have inflation at 12.3%. We have the NPR at 12.5%, and the Brent crude at $40 thereabouts. And we have an external reserve at $36.4 billion. Now, the question I'm sure most of us will be asking ourselves is, what does this mean to me as an entrepreneur? This means a lot to you. You really need to have a background understanding of your microeconomics to really know how to position your business, to really be able to plan and understand what your customers would really be and the situations they are at that particular point in time. Now, I'll speak to a few of this so that I give you a background understanding. Looking at the external reserve at $36.4 billion, this is pretty good, in the sense that this gives Central Bank of Nigeria enough capacity to start to defend the Naira. It's going forward for another 6 months. So we expect that the FX rates within the space will stay relatively stable within that time frame, as well as the increase in crude oil prices as well will help the government as regards revenue in that regard. Another thing to concern you is the inflation rate. How does this affect your business? What are the prices of your raw materials going to look like? What are the prices of commodities in the market? Will people have enough purchasing power to actually buy your goods and services going forward? Is the country as a whole growing, or are we receding? Is there going to be a recession? How do you strategize? How do you plan to make it through this COVID period, which basically is majorly responsible for most of the things you see in our macro at this moment, right? If you all remember back as 2-3 months ago, you typically remember the FX trading at 360 per dollar, right? Now we see it, trading at 449 in the parallel market, right? Officially is doing about 386 because of the devaluation by the CBN. And all these have been forced basically because of the pressure that the government has had to face due to the COVID situation, the reduced crude oil prices, inflation rising, and just the altogether fiscal policies of the government. So it's very important that we're aware of all these macros to be able to guide your various businesses going forward. Now, we'll take a look at the GDP sectorial breakdown. I felt this very important for the businesses to really understand where your position is at this particular time. Right? There's COVID out there, the markets are really depressed at this time, and you have to see, how can you thrive? What does it look? What's the upside for your business? So if we take a look at agriculture as a sector, so if you're an entrepreneur in the agricultural sector, you see that the impact of the COVID so far has been a bit moderate, right? That means it's not positive, it's not negative, but it's been moderate majorly because there's been a lot of monetary and fiscal intervention by the government, right, to support this segment of the market, which is a plus for you. So you'll be able to access cheap loans, to be able to grow your stock and feed, right? But in the trading sector, this has been majorly negative. COVID's impact on the trade sector has been extremely negative because in Nigeria, as we all know, that most of our trades are done informally, and people have been skeptical. We have to observe our social distancing rules, and people are not moving around to typically trade as they would. And that's why I believe there's an opportunity in this space as well. And that's why the TF entrepreneurs stand a chance to really play a significant role in this regard by finding innovative ways to support the trade segment of our market. Information and communication is doing positively. It's really the time to go digital. So you see companies like MTN and other companies that play in this telecommunication space are doing pretty well at this time because of increased patronage as regards data and of course phone calls as well. Manufacturing has been moderate due to government support as well. Crude oil is negative, real estate is negative, construction is negative. Most other businesses are really in that negative territory besides finance and insurance as well, whereby these are business functions that are pretty much essential and have found innovative ways to be able to function even during the pandemic. Another area that is also receiving a lot of attention at this time is human health and social services. So if you have an entrepreneur down in the human health and social services sector, definitely there are a lot of opportunities for you in this space because people are now more aware as regards their health and also buying more products as regards that segment of the market. So we'll move from that. I hope this has helped most of the entrepreneurs here to really see where their business is and see what the impact has been so far and be able to project going forward and find innovative ways to really take advantage of the market or just make some adjustments. So here's my quote. One of my favorite quotes of all time. It states, "It's not how much money you make, but how much money you keep, and how hard it works for you, and how many generations you keep it for." Right? The reason why I feel this quote is very, very important for everyone is if you can break it down into 4 segments, and I'll take the 4 segments, right? It's not how much money you keep, but how much money, it's not how much money you make, but how much money you keep, and how hard it works for you, and how many generations you keep it for. This simply says that it's not simply just about making money, right? It's good you keep it, but it's better it works for you and you store it from generation to generation. We'll see that a number of entrepreneurs in Nigeria tend to make a lot of money at some point in their business because we understand with every business cycle, there's always that boom, right? And sometimes it'll start declining as well. The question is, what do you do with your boom? When your business is thriving, what do you do with your resources? We typically tend to assume that once our business is doing well, it will continue to do well going forward. We never tend to plan for situations like a pandemic, for example, right? So most of us hardly ever store that reserve cash or make strategic investments to diversify our businesses, but we just keep on, prying it back into that same investment, expecting to yield those same level of returns. And I was going to mention this before I got started, and it's a good thing I'm going to mention it now. From my personal experience working with entrepreneurs that are looking to make financial investments, they don't want to. And this is why. Because they always feel that the investment they are making should always be equivalent to the returns they will make typically in their own business. Financial investments are not meant to match your business or replace it. They are meant to support you, right? They're meant to assist you along that journey. And that's the essence of a financial investment. It's not to compete, it's not meant to match, or it's not meant to exceed. We understand that your core business will definitely, because you're taking a lot of risk, will provide you higher returns than what you would get in the financial market. But doesn't mean the financial market doesn't have a part to play in your success. So move on. If you look back at the quotes and we see the individuals on the screen, right, this is in no means to make them belittle them, right? This is just to show you that you can make a lot of money on the average, the two footballers you're seeing on the screen were making pretty much about 60,000 pounds or euros a week. Making those kind of sums, people would typically say, we would never go broke. I would never be bankrupt. Both of them went broke and went bankrupt. Question is how and why would that happen to someone? And if you look back and take it back to that quote, they did make money, right? You would agree with me, they made money. Then the next thing, did they keep their money? Perhaps. Did they make it work for them? Absolutely not. And their next generation, are they going to see it? No. So they got one thing right, they made money. The rest, they got it all wrong. And I would like everyone to know this could be anyone. We are not smarter than any of these two. It's just that we have to make better decisions than they did. And that's why I urge everyone here today to do, because this really could be anyone. You're an entrepreneur. 2 years ago, maybe you started the business in your first year, you made a return of maybe 40 million, great record. You thought you would do the same thing the next year, you did the same thing, but now there's COVID. Your business is managing, you're barely paying your salaries, right? What could you have done with the resources of the boom, right, when you had it in excess? That's the question you should be asking yourself at this present time. And not looking back with regrets, but just looking forward on how you could, change the course of the future. So what are the investment options available to entrepreneurs or you as an individual as well, right? What investment options are available to you? I'm sure most of us might have had things as regards the capital market and of course the money market as well. The capital market pretty much is a market whereby investments for long-term investments are done, typically investments above a year, right? So in this space, you see things as regards the government and corporate bonds, you see the stock markets, and you see the euro bonds. While in the money market, it's pretty much investments or borrowing of debts within a 1 year period. And what we would have in this space is treasury bills, commercial papers, and fixed term deposits. I'll quickly touch on what each of these asset classes are, just to ensure that we all understand what they are. So typically with the government or corporate bonds, these are just long-term borrowings, either by the government or by corporates, right, such as yourself. So you equally could access this market to get funds from the general public if that's what you are looking to do. However, you also can play in this space by investing in such instruments that are floated by the government and other top-tier corporates. The stock market is the market whereby you can trade to actually buy stocks of companies on the Nigerian Stock Exchange. You as well, I'm sure, as an entrepreneur or organization, will be striving one day to have your company listed on the stock exchange. The euro bond market pretty much is when the government or a corporate issues a debt instrument in a currency other than a functional currency, in which case in Nigeria is the naira. So typically what we have available in the market now are dollar-denominated euro bonds. In the money market space, that's the treasury bills. These are just short-term borrowings by the governments within 1 year, typically structured in 3 tenors, which is the 3 months, 6 months, and 1 year, which is 91 days, 182, and 365. For the commercial papers as well, this is short-term borrowings by corporates such as yourself, and we have the fixed-term deposits. So we'll be moving on quickly. Now, typically with investments in the financial space, or in life generally, they have the risk, they have the reward, right? So this curve just pretty much shows you the trend in the financial market. So typically the lowest form of risk you could possibly have is having your money sit in your bank account, right? While the next level will be your treasury bills, government bonds, corporate bonds, equities, and alternative investments such as private equity, angel investments, and the likes. And of course, cryptocurrency, but that's a debatable subject. So let's take a quick look at what's happening at the stock market. So this dashboard pretty much shows you what's happening in the stock market as we speak, right? As we know, with most markets, both in the global economy and of course the local market as well, it's pretty much depressed at this moment, right? The market is at a negative 6.9% as we speak, which is a bit gloomy for most of us. But however, I would like you to note that when the market is depressed or is low, it's really an opportunity. So you shouldn't look at it in that perspective. When the market is low is when you actually should be considering certain options to take advantage of the market. We have stock picks here that we've highlighted, companies such as MTN, GTB, Zenny Bank, Dangote Cement, and Nestle provide a lot of opportunities for potential investors. I'll give you a personal example. Literally about a month or 2 months ago, Dangote was trading at his year low at 118 naira, right? Currently is currently trading at 135, even after paying a dividend, right? So you can see the potential upside in that, and we're still projecting an 11.5% increase in the price itself. So the stock market pretty much is a market where you could make a lot of gains. At the same time, there are potential losses. But to guide your investments in this space as regards the stock market, I believe everyone should have a long-term approach. And you also have to have concrete reasons to why you are playing in this space. If you're an investor looking to invest in the stock market, the question really is why? What are you looking for? Are you looking for capital appreciation, right? Or are you just looking for dividend? Dividends pretty much will help in situations like this when there's a pandemic. If you're invested in a stock that typically would always pay dividend or will thrive regardless of the situation, right? Because the dividend could pretty much provide for your business extra cash flow while you wait to gain on the capital appreciation if that exists in the nearest future. So I think this is a space where most people shy away from, but it's a space that is very rewarding and gives a lot of opportunity. So if you're a high-risk investor, this is a space for you. So looking at the capital and money market dashboard as well, this just shows you the various instruments that are listed in the markets. That's the federal government borrowings in the bond markets, in the Eurobond, and of course the Treasury bill. I'm sure most of us are more familiar with the Treasury bill space, and we see what the trend is like in that regard. Rates from the 91 days to the 364 are ranging from 1.8% to 3.7%. This is really low, right, compared to what the typical Nigerian is used to. We're used to most of these rates being at least 15 naira levels, 18, 12, and the likes. But to have it as low as 1.8 to 3.7%, the question you ask yourself is, why then do it? And I understand that, but I mean, at the end of the day, it's very important that every excess cash you have is yielding value. And during the course of this presentation, I would show you alternative investments to the Treasury bill that will provide you equal value, shorter liquidity, and flexibility, of course, offer you higher returns. So there are a lot of opportunities in the market. We just have to seek them. And the bond market as well, there's a lot of pressure in that regard, with a lot of people looking to play in this space to take advantage of the yield, which is bringing them a bit lower than they used to be as well. The Eurobond market too offers attractive rates if you're someone or a business owner that is exposed to the dollar, right? So you make a good level of your profit or your revenues in dollars. Then we have a perfect outlet for you to be able to invest those funds. So what should you typically consider before you invest? What should you consider before you invest? I think it's very important that you consider the level of risk you are, you're looking to take or you're able to take. As I mentioned earlier, the higher the risk, right, the higher the reward. But it's not just for you to jump at risk because of returns every chance you get. There are certain things you also have to put into consideration as an entrepreneur, or even you just as an individual. The other thing you really have to look at is your liquidity. How much cash do you have idle? How much cash do you have access to? Are your assets liquid? What are your obligations like? And that's where cash flow comes to play. What I'll typically advise every entrepreneur today, right, if you're to take away anything from this session, is really to really put your business in some sort of cash flow projection. Look at the potential revenues you're going to be having and the expenses that you're most likely to incur. What do you have left when you net off the assets and the liabilities, right? What do you have spare? If you don't have spare, what would you need? How much would you need? Where can you get that from? By doing this personal assessment, you'll be able to plan into the future and see how much cash you actually have available to invest now. This will be able to guide you to be able to split your investment across various asset classes. And that's when you'll be able to diversify into, having some in high risk, low risk, and medium risk, and plan for the long term and the short term as well. So it's very critical that you look at this before you actually start investing. Another thing you should consider is the age of you as an individual if you're looking to make a personal investment, or even the age of your business. How well have you grown? What kind of stability have you been able to achieve for your business? What kind of stability have you been able to achieve for your business, right? And equally, what is the duration of the investment you are about to make, right? All this tie into each other, right? It's very important that you have an holistic view of why you're making an investment, and what you aim to achieve from making that investment. It's very important. Another important reason for you to be able to, before you make an investment, that you should also consider is hedging. Hedging is another thing that most of us do not consider, but it's very important. As I mentioned earlier, some months ago, the dollar was at 360. Now, parallel market is at 449. It's at 449, right? If you look at that spread, if you're a business that has a lot of obligation in dollars, if you have to source raw materials and the likes, then it would have been done you a great good if you had substantial funds in dollar-denominated assets to hedge the potential devaluation. And it's never too late for you to do that. I would encourage anyone that still has such future obligations for their businesses, if they have to source raw materials once COVID is over or the pandemic is over and they're vaccines and all that, for you to be able to start being able to hedge potential devaluation risk in the future. If you didn't do it now, it's never too late. So I think that's another thing that's very critical to you as a business to start considering. Hedge, diversify, do an assessment of your cash flow, ensure you have sufficient levels of liquidity to meet your needs, check the age, your personal age, if it's a personal investment, and see the level of risk you can take. Because investments are also age specific. The older you are, the less risk you actually should be taking, right? So you need to put all this in a bucket to guide your planning. Now, so the last section before we go into our specific products that can help you with this journey is the time value of money. I believe this is the secret to wealth. Be it you being an individual or even you as an entrepreneur or your business, the time value of money is really and truly the secret to wealth, right? So we're going to do a quick test. So you can just put your responses in the chat box to let me know what your response would be. So this is what I call the time value test. What we're trying to achieve here is to really know if you're understanding what we've been talking about so far. I understand most of us are used to investment banks or businesses taking funds from us. However, we'll play the other way around now. If we're to give you 10 million naira now, not for your business, just for you to make a financial investment, 10 million naira now, or give you 13.3 million in 3 years' time, what would you choose? I would really love to see your responses in the chat box. What would you choose if we were to give you 10 million now or promise you 13.3 million in 3 years' time? What would you choose? While you guys are dropping your answers, I would have to quickly run through this, right? There is no right or wrong answer to this question. At every point in time, you have to make an assessment of the current position. If you were to receive funds now, what would be the available investments? What is the risk tied to it? And what is the potential return? If you were to just do it on a straight line basis to be able to match both sums together on a straight line or on the same field, what you typically would use is low risk investments such as maybe a treasury bill to do your assessment and say, if treasury bill was doing this over the next 3 years, would I have more, right? Or would I have less? That would pretty much guide you in your thought process as regards money. It's always good to get funds, right? Because you always believe there are alternative uses for it that you generate more value. But it's also very important for you to do a baseline assessment to know what is really obtainable in the market, what's the upside and what's the downside. There are a number of people that you'll be surprised that they'll be giving this 10 million now and they believe they have alternative investments to put it in and plow it into. And trust me, 3 years down this line, this 10 million will cease to exist. So it might just be better for them to get it in the future. Now, this shows you the true power of the time value of money. Now, what I have on the screen here is what I would consider 3 types of people, 3 different types of people. They have a disposable income or excess revenue of 100,000 monthly, right, which they can choose to invest or save or spend, right? The first guy decides to put his investment in a 10% yielding money market investment over a 15-year period. What this simply means is he's going to be investing that excess 100,000 over a 15-year period because he has a target in mind. The future value of that is about 41.5 million naira, right? While if he was able to get an annual return of 13%, the return is in excess of that of about 55 million naira. And we can see these are huge sums of money just by someone being very diligent and storing away this money in an actual investment that is yielding value. However, if you were to make this 100,000 naira contribution over a 15-year period, right, without actually investing it, what you would have is just 18 million naira. The difference between 18 million naira and 41.5 million is quite a lot. And the difference here, as I said earlier, is just the time value of money. Every day you leave your funds idle, you tend to lose. And every day you invest your money, you tend to gain. The difference between the two is just a conscious action and deliberate focus to actually have more in the future. So I urge each and every one of us, if we have idle funds and we're not putting them to good use, the time to actually do that pretty much is today. If you fall into the category of people or entrepreneurs or businesses that have idle funds and just always rather leave that idle, I would urge you to find credible investments to put them in today, such as our money market fund. The difference between where you will be 15 years down the line and where you are now is really just a function of the time value of money, right? So you putting it in an investment that is yielding interest, and in this particular situation, the interest is compounded on a quarterly basis, just as it is in a money market investment. Your interest will start to generate its own interest, thereby giving you more value. And that's why you can see the type of returns you're seeing over the period as opposed to when you leave your funds idle. This slide really is just to show you the true picture of where you could get to even when you're just starting now. Different businesses or us as individuals might be at different points in our life cycle. However, the time to really start was yesterday, or you can take advantage of investments today. So what is the solution to all this? We at United Capital have developed a solution for individuals, corporates, businesses, private-owned businesses as well to take advantage of the market. We have an investment solution called Invest Now. Now, what Invest Now allows you to do is, we understand that most of you might be in different locations, even outside Nigeria, and you're looking to make investments, and the question really has been how. What Invest Now allows you to do is take advantage of our digital platform, just as you would with any online banking, right? To be able to start making investments. On this platform, you could open an account with a zero balance. You could trade on the Nigerian Stock Exchange, which I spoke about earlier. You could start, with a target savings, what I just spoke to now with the money market. You could make recurring payments, thereby just setting an amount to which you would like to set aside every month for your business or for yourself, so that you can start saving into the future. It's an easy to use app which you can download on your Google Play Store or iOS store as well, or you can just go to the web investnow.ng to really get started. I thought to put this first before I go into the products, so that as I speak, we can start to download and experience it and ask questions if need be as regards the application. Very easy to use application. So as regards the products that we have that could be of good use to you as regards solutions to making investment, this is one I urge any entrepreneur or individual to have. It's a money market fund. You probably must have had this over in the market or different places at different points in time, but I'll just shed more light to what a money market really is. A money market is a mutual fund, which is a collective investment scheme. Let me leave aside the grammar, right? What it simply just means is your money being put aside other people's funds for you to be able to meet a certain purpose. In this particular case, for you guys collectively to invest in the financial markets, be it money market instruments such as treasury bills, fixed term deposits, and commercial papers. The question I get typically from most people is, why would I want to put my funds with that of other people? Why can't I just invest on my own, right? The simple reason for this is the bargaining power. You tend to get more if you do have more than if you go alone and your funds are a little. I'll give you an example. If you wanted to do a fixed term deposit, you would typically get something within the region of, let's say, 3 to 4%. If you had 10 million, 20 million, 1 million, right? But if you have sums of 20 billion, you would tend to get higher than that. And that's the essence of going as a collective whole, because you will get an extra bargain by investing in mutual funds, and in this particular case, a money market fund. It's very easy for you to start investing in this fund, because with as little as 10,000 naira, you can start and you start getting returns as high as up to 6%, right? Very easy to invest. It has a minimum holding period of 30 days, which simply means that after you invested for the first initial 30 days, you can have access to your funds at every point in time. I believe this is a very useful complement to what you currently have in your bank. Yes, we know it's very important that you keep some funds in your bank account, very important. However, it's also very important that you put some aside, because this offers you similar value as regards preserving your capital, giving you higher returns, and of course, giving you access to it and that liquidity that you do desire. The other investment I'll speak to is our bond fund. Now, what our bond fund typically offers you is similar to what the money market does. It's just that it gives you a higher return. Now, for you to get this higher return, you pretty much have to keep the funds with us for a longer period of time. And in this case, the minimum holding period is 90 days. After the initial 90 days, you do have access to your funds, your capital, and the returns that you would have accrued over that period of time. So basically, we compensate you with higher returns for keeping the funds for a higher period of time. And this speaks to what I mentioned earlier as regards you being able to plan your cash flow, how long you can invest in a particular investment for your expected return, so you can plan with that. And the last product I'll speak to is our United Capital Nigerian Euro Bond Fund. This is our investors' delight, right? It's a dollar-denominated mutual fund which invests in bonds floated by the federal government of Nigeria and also that of top-tier corporates. The essence of this particular product was really to meet the needs of our investors that were looking to hedge and also have certain obligations in USD. With a product like this, you'll be able to hedge your FX risk, the potential devaluation that could occur in the future. With this investment, all you need to get started is a minimum entry of $1,000. You also equally have a minimum holding period of 30 days. So it's a very liquid fund. We urge you as an entrepreneur to really look into start storing up some value to hedge potential devaluations in the future. Currently, the fund is returning about 6.97%, exceeding its benchmark and exceeding all available options you could possibly find in the market at this time. So I think this product is a no-brainer for especially the entrepreneurs, because we understand that Nigeria is an import-dependent country. So we understand most of the resources you will be for your raw materials you'll be getting will probably have to be sourced from elsewhere. Although we urge and encourage you to start looking to integrate backwards and start looking to get some of those raw materials back home in Nigeria. But pending all that is sorted out, I think you really should consider taking advantage of a fund like this. And if you're not in Nigeria, if you're from anywhere else also, you can also still have access to this investment. You can engage with us on how to go about this. So before I end this presentation, I'll leave you with the do's and don'ts of investment, and I believe we should all take this dear to our hearts. First things first, before you make an investment, please ensure you do your due diligence, match the returns with the risk, speak with a validated finance advisor. For the don'ts, ensure you do not let a third party manage your investments. Just to be a bit clear on what a third party means, being that you probably have a friend, or family member, a colleague, or anyone just telling you to invest the funds with them, they'll help you with the investment. It's best you always go direct to whatever investment you're trying to make. Eliminate the third party as much as you can. Do not transfer investment funds to a personal account at any point in time. No investment house would request that you transfer funds to a personal account. Do not invest in any money doubling schemes. And of course, ensure that you're investing in real assets, not liabilities such as luxury items such as cars. You all can see the gentleman on my screen. This could be you. You could be the future leader in the global business space. All you have to do is be diligent, plan, and execute. This really could be you, and I really do believe this. So before I leave you, I'll leave you a quote which states, "Inflation is a tide that submerges our savings. We need to invest to stay afloat." What this quote is really telling us is every single time we do not invest, we are losing funds. And the value of what you're going to buy tomorrow is not going to be the same price as it is today. For you to be able to match up to that, you have to start getting value for your funds today. So I urge each and every one of you, every single entrepreneur, to really start looking at making financial investments, not to take over your business, but just as a means to support what you're currently doing. We don't all plan for pandemics and situations like this, but if you had startup values whereby you were getting residual income, I'm sure it would have really gone a long way to help each of your businesses. So I look forward to your questions. Thank you all for having me, and to the guys at TF, thank you for the great job you're doing. It's a great pleasure to be here. Right, I can see I have quite a number of questions here. I will start taking them. So the first question I have here states, what are the key signals that indicate a stock price would increase, decrease, or stabilize? What factors cause the change and how? This is a very brilliant question and shows that the person is really paying a lot of attention. So really, what really drives the stock exchange are a number of things. There's the trend analysis, there's pretty much the real economy as a whole. But for me, in my own personal investments guide, what I would do is I usually work with what's happening in the real economy. what's happening with the macros. And that's why I decided to start with the slide with looking at what's going on in the general economy. What is the inflation like? What's the gross domestic product like? What sectors are going to thrive? So if you look back at what I showed earlier, you see certain sectors that are bound to thrive, like the telecommunications. So if you look like a stock like MTN, it's a no-brainer that they're going to have a very good fiscal year, right? The financials are going to be good. Their revenue is looking very good, right? Cost might even be a bit lower with remote working and different measures I'm sure they put into place. So you'll be sure to know that a stock like that is going to do well this year. So when is the time to buy? You're not going to buy the stock when you see that result is, is good. You're going to buy in times like this when you're already seeing that forecast, right, prior to the results being out. So for you to be able to play in the stock market, you really need to be very conversant with what's happening in the real economy and be able to project forward. And working with a company like ours, with United Capital, we provide you with research reports which provide you that required insight into the market for you to be able to see what's really going to happen. We're going to release our Q2 report shortly, which will really show you, the half-year report, which will really show you what's really going to happen going forward and also reflect on what's happened in the past. That would really serve as a guide for every investor looking to play in the stock market. How can entrepreneurs raise capital in order to start investing wisely? Not sure I understand this question too well, but I'll explain the best I can. So raising capital could be for different reasons. So as a business or as an entrepreneur, I would understand that if you're raising capital, you're raising it to put it into your own business, not to invest, right? So if you're raising capital to put into your investment, our guys in investment bank will be able to guide you through this process. You could either get funds from the debt market or the equity market and be able to put you through that. However, if your question meant on how do you start to raise funds, I believe the best way to start to raise funds internally to start making your personal investment for your business or yourself is to put aside funds when you're in the boom cycle, as I mentioned earlier. Your business is thriving, you're seeing that your asset to liability, you're having you're in an excess position, then you definitely have to start storing some of that value away into financial investments for the rainy day, not just flying everything back into the business. What do you think is the best investment strategy, long-term, short-term, or a combination of both? Definitely a combination. Different duration offer, different risk and duration offer different kind of possible returns or value to you as an individual. Short-term investments are pretty much meant to meet your short-term liquidity need. So if you're to pay salaries in the next 2-3 months and you're putting money in an investment, we expect you to put in something such as a money market so that you can easily redeem that to pay the required salaries that you have to pay. However, if you have some value or some funds that you know you're not going to need in a year's time and you're seeing some good positions in the stock market, then you can take advantage of that. Of course, the longer your investment or the risk, the higher the return. So you always need a cool or a good balance of all this. And just to add to the mix, you also have to hedge by investing in other currencies such as dollar-denominated investments. Is investing in oneself via supplementary education or personal branding wise compared to traditional investments? I don't think any can replace the other. I think the smartest investment you could ever make is investing in yourself. I would typically always invest in my personal development as well as investing in financial instruments. They provide two different things. So investing in yourself pretty much is investing in your growth of you as an individual, growth of your business, so that you therefore in the future have more capacity to earn more, to be able to even save more in the financial market. Now, the essence of having investment in the financial market is to meet different obligations. Short-term obligations, as I said, such as salaries. Little do many of us know that if we had invested some of this investment in certain instruments, the proceeds or the returns can help us net off salaries. But some of us don't do that. We just leave the funds idle and we lose value. That value could have paid off salaries, could have met some short-term expenses. So for me personally, invest in yourself, however, still leave a little bit on the side to for financial markets, for other opportunities that would exist. but not one for the other, right? They both go hand in hand. Have you considered inflation and the impact that it has on investment? Of course, inflation is the main reason why we have to invest. As my coach will say, we need to invest to stay afloat, right? Because inflation is that tide that's going to submerge us at the end of the day. Inflation at the current levels above 12% is really, really bad. It's really bad for any individual or any business, because that just means cost of things are just going higher, and they're going to keep on going higher. Now, the question is, would you not invest just because you feel inflation is high? That's the main reason why you need to invest. You need to invest so that you can at least try to match the inflation. Even if you don't match the inflation, at least you're better off, right? But every point in time, we should try or try to get a real return, which means that we're getting returns in excess of the inflation level. But at the current rates in the market, it's very hard to achieve that. But I'll still urge you to still make sure you make some investments. You having matching it up a bit and being in a negative 5 position is better than being in a negative 12% position, right? So considering, the next question states, considering the volatility of the financial markets, forces of demand and supply, the changes in CBN policies, interest rates are likely to change. Within this context, how accurate can your projection be that investment of 100,000? Oh, thank you for that. I mean, that was just an example. That just really shows you the true value of money. I'm not saying it's going to be that years down the line. Currently, the rates in the market are really even below that particular return that was quoted in that slide. However, it just shows you the potential. Even if it was 1%, you'll be making a lot more than you would have if you kept it in the bank. So that's all that's trying to show you. How can you define what the money market is to a layman? So as I mentioned earlier, what a money market means is it's a short-term investment instrument or debt instrument that's usually just within a year, right? Things that fall within this category are things like the treasury bill, fixed-term deposits, and commercial papers. Right, so that means if you're invested in an instrument in this segment, you typically would get your returns within a year. Now, speaking to our money market fund, what the money market fund does is it takes money from various investors and invests in these various instruments and creates a cool cocktail of investments, right, to create the right size portfolio to give you the returns that you deserve. So investing in this space is pretty very liquid. It's a bit more lower risk than investing in the capital market or longer term investments. I'm just trying to run through this before the time runs out. What are the different types of money markets? That's why I just mentioned treasury bills, commercial papers, and fixed-term deposits. However, at United Capital, you need not really worry about the various breakdown of these various instruments because we have a vehicle, which is our money market fund, one of our mutual funds that will help you with this entire process. So what's the best investment for someone with low income from either business or employment? I think if you're in this category, mutual fund fits into this bill, because as I mentioned earlier, the minimum requirements to invest in this mutual funds are basically about 10,000 naira for the money market and bond fund, while $1,000 for the Eurobond fund. So these are they have very low entry and are useful for literally everyone. And one thing you should note by investing in mutual fund is you're getting the same returns as what big institutions are getting. I mean, you're investing 10,000, you're getting a return of about 6%, while big corporates are investing 20 billion and getting the same return. So I mean, the power is really in your hands at this point in time, even with the low funds you might have at this point in time. What's the difference between the money market and the capital market? I think I spoke to that a bit earlier. The difference between the two is pretty much the duration of the investment. Money markets typically are within a year, while the capital markets are usually above a year. Does United Capital offer options to invest in stocks? Yes, we do. As I mentioned earlier, with our digital platform Invest Now, you can trade on the Nigerian Stock Exchange at the comfort of your home, or you can still send us mandates. And if you require any further information, our research unit will be more than glad to provide you that insight. So yes, you can trade with us, you can buy stocks and all that. What is a better investment, business or property? So the property market is another market on its own, right? It's also a longer term market, just like the capital market. I believe each segment provides its own different value. Buying into property, yes, you could get some capital appreciation, you could also get your rental. Investing in financial markets, you also equally get your returns, your dividends. I think it's always important that you have a cool diversification of all your assets. So it's very important you have in different segments, but not everyone can have it in all segments at the same time. And if you understand very well, the property market is a bit more high-end and more costly and expensive for you to play in. So it's better for you to, if you're starting off with investment, it's better if you start off with things as simple as a money market fund. As you begin to build your portfolio and your strength size, then you can start diversifying into things such as property investments and the likes. I'll just look through if you still have any other question that's not been answered. Is it wise to buy shares from a company using seed capital for my business? Absolutely no. I would not say you should use your seed capital to invest in the capital markets, right? I mean, by the very word or essence of the word seed, it's what you're meant to plant to grow your fruits, right? So what I would say is plant that seed in your business, right? Plant that seed in your business, let it grow, right? Then when you have the fruits, from the fruits, you can now use that other seed to plant into various other investments. However, if you do have a seed investment and you currently cannot maybe access a raw material or meet certain requirements at this time and the funds are idle, what you then should do at that point in time is invest in low risk liquid investments where you can sleep at night and know that your capital is being preserved. You do not want to gamble with your seed investments. What you pretty much put in high risk investments are funds that you pretty much don't need in the near term, and if you did even lose them, you would not lose sleep at night. So thank you everyone for having me. I think that's pretty much about it as regards to the questions. I hope you found this insightful. If you do have future or if you do have other questions, please just send an email to inquiries@tonyelumelu-foundation.org, and of course they would forward those questions to me as well to be able to give you a feedback. Thank you for having me. If you have other questions as regards to your personal investment as well, you can reach out to us at United Capital PLC Group as well, or just send me an email to at ore.ajayi@unitedcapitalplc Group. Thank you all for having me.